Hello, everyone, and welcome to today's Tradeshift Second Paradigm Shift Debate, which is part of our fall program where we have 3 weeks, 3 debates, and 3 perspectives on the economy, planet, and people. I'm Christy Kaler, and I'm part of your strategic engagements team here at Tradeshift. I hope you're having a very wonderful beginning or start to your day. Either you're joining us with a hot cup of coffee or maybe a much needed midweek happy hour at the end. I'm joining you from a very chilly Toronto, so it's definitely a tea day here for me. Today, we have an excellent lineup of panelists. They're experts in the field of sustainability. They'll be covering a wide range of topics from fast fashion to supply chain transparency to investing in sustainable innovation. I'll introduce you to today's moderator in just a moment, but before I do, a very quick bit of housekeeping. First, if you missed last week's debate on the economy, you can access the on-demand through the event webpage. Also, I'll invite you anytime throughout the debate to pop any questions that you have into the Q&A at the bottom of your screen. We'll have a few minutes at the end, and those questions we can ask our panelists at that time. And last and certainly not least, following the debate and Q&A, we're going to have our Chief Product Officer, Rafi Brez, join us to wrap up. So without further ado, I'd like to introduce you to today's moderator, Emily Chasen, who's currently Head of Communications at Generate Capital and former Sustainable Finance Editor at Bloomberg. Emily, thank you so very much for joining us today. A very warm welcome from us at the team, and I'll turn that over to you.
Thanks so much, Christy, for the introduction, and thanks for having me at Tradeshift today. I'm so excited to have this discussion on what would you pay to save the planet, which is definitely a crucial topic as we're having all these conversations about how we want to invest going forward. So we have a great panel lined up today for you today. The first panelist I'd like to introduce you to is Marissa Drew, Chief Sustainability Officer for Credit Suisse and Global Head of Sustainability Strategy in the Advisory and Finance Group there. Marissa is responsible for setting sustainable strategy and ambition for Credit Suisse on sustainability and has been a banker for 18 years. So she will bring a lot of experience to this discussion today. Our next panelist is Morten Lehman, Chief Sustainability Officer for Global Fashion Agenda. Morten is Chief Sustainability Officer of the world's foremost leadership forum for industry collaboration on sustainability in fashion. He talks a lot about the pulse of the fashion industry and what is going to happen with fast fashion. So we're delighted to have you here with us today, Morten. Great. And our last panelist is Mikkel Brun from Tradeshift. So excited to have you here today to share your perspective. Mikkel is SVP and co-founder of Tradeshift and Vice President of Greater China there. So he has a great global perspective to add to our discussion. So with that, I'm glad to have all of you here. I figure let's just start off by introducing a little bit about what you do in this space and how you see the business case and systemic thinking for sustainable finance and for the planet as we invest. So let's start with you, Marissa. What's the business case and what are you thinking about in systemic thinking about sustainable finance?
Sure. So I work for Credit Suisse, which is a global financial services firm, and we interact with 3 different client segments principally. So we've got our private client universe through our private bank. So these are people acting as individuals, investing their money. And what we find is they are extraordinarily keen on trying to align their investing with the things that they're passionate about. And it generally ends up being something in the arena of values aligned finance. Increasingly, we're also seeing that client universe say that they want to invest thematically behind UN SDGs. So it could be a passion for the oceans or a passion for equality, but it's a very, very personal decision. But the amount of money that is headed from that client base into sustainable finance is just growing leaps and bounds. And then we interact with the institutional investment community. So those are people who run big pools of capital, whether it's pension funds or other asset managers, and they're looking for scale capital. And once again, those who give them money are asking questions about how they're deploying that capital. Is it environmentally friendly? What are the social policies associated with the companies they're investing in? So there's a pressure point or a push there that is asking them to think differently about their capital. And then finally, the corporates. And I think we could probably touch on that very, very well with the case studies in fashion. What we see in virtually every industry, or in fact, every industry, is that there's a combination of pressures at work. We might have underlying consumer changes in behavior and tastes. I know that when I was growing up, I never asked a company what its environmental footprint was or what its social policies or labor policies or its supply chain before I would buy its goods and services. But the consumer today is asking those questions and the companies have to respond. And in addition to that, investors who are buying the shares of companies are asking and demanding that they respond to those questions. So you can see across the entire ecosystem, this agitation, if you will, this change, and that is driving the investment community to seek to deploy funds there. And what that's doing is creating its own reality in terms of incredible investment opportunities. So we know that to save the planet, it is going to cost trillions of dollars of investment, both in new technologies and disruptors, but equally the transition of mature industries and making them more sustainable. And with that capital needing to be spent, opportunities proliferate all over the place. We're seeing, and just I'll stop after the COVID point, but the pandemic has been, in some respects, obviously a horrendous experience for all of us to go through. But if there is a bright spot, it is the fact that those who've had money invested in sustainable strategies, they almost systematically outperformed their peer benchmarks. So what that has done is created confidence and enthusiasm to put more money to work in this space. And so that gives us a lot of hope and enthusiasm for the overall finance sector. And we're seeing that growth rate, just explode. So I will stop there, but it's an exciting time to be in the space of finance because we believe that's a real paradigm shift with this concept or notion that you can link returns with positive societal outcomes.
Thanks, Sarissa. Yeah, things definitely are different than they were even just a few months ago after COVID has sort of had everybody rethink what they're doing in this space. And there is so much money to invest, and that's a great point about it being a proof point. Morten, I'd love if you could tell me, what's the business case that you're seeing for how to save the planet right now, and how's the system changing around you?
Yeah, thanks a lot. As an NGO working to mobilize the industry to take bold action, this is what we've been trying to do for many years. You talked about the Pulse report, which calculated the business case on a P&L basis. What is the business case for a brand to work with sustainability by 2030? So we clearly saw an uplift of doing that compared to working with business as usual. So the business case is there on a long-term basis. I would, however, challenge how big that business case is on a short term. Right now, we are seeing that what you said, Marissa, it's all going in the right direction, but it's starting from that corner right down here. So we are seeing that the right trajectory, but right now what we are seeing with, for example, consumers is that they are ready to punish but not reward companies. So, and we are seeing lots more investors investing in this, but for many, there is a business case not to work on sustainability in the short run. However, I think when they do that, it is for the short term. They will not be the winners of the future. So the business case is there for CEOs who says, what I'm doing now to survive, for example, COVID, the decisions I make, I know that I have to think about if these decisions are also the decisions that will make me the company of the future, that will enable me to articulate authentically the purpose of my country, of my company, so that I can gain that upward traction from consumers, and then I can get hold of the investment. But we're also seeing that companies that performed horribly during COVID-19 in terms of sustainability, they got a crash, some of them on the stock prices, but now they are up here. So they're also investors still looking for those short-term gains. Some of these companies are even gaining more followers on social media, despite of what they did. So definitely we're going in the right direction. We still have a lot of work in front of us.
Thanks for that, Morten. Yeah, I agree with you. We're just the beginning of scaling so many clean energy, energy transition solutions, sustainable solutions. So this is an exciting time, but it's interesting to see the market response, and maybe it's getting ahead of itself, maybe it hasn't. Those are great points. So Mikkel, tell us about your systemic view right now, and what's the business case that you're seeing for sustainability?
Well, thank you. Well, in Tradeshift, we connect large multinational companies with their supply chains all over the world. So we're, in a sense, trying to create transparency and insight into those supply chains and insight into ESG components. And what Morten said, I thought was very interesting, talking about the short-term business case. And I think you're absolutely right, because today we have a lack of transparency in our supply chains. We can only see into our tier 1 suppliers, but we cannot see what's happening at sort of the root of our supply chain. So we can't really give the consumers an honest view of whether the chocolate bar that they're eating now is made from sustainable crops, and if the labor that went into manufacturing was actually without slave labor, etc. So we need the tools to let the money flow in the right direction. We need real-time data, so those investment decisions can be just like what we see on the exchanges with stock prices and the internal metrics of the companies. We need to see real-time ESG metrics for all the companies we can invest in today and where the money can go. So I think this is really key to moving the business case from not being so good short-term to actually being amazing short-term. If you do the right thing, you will see cheap capital coming in and funding your business, flowing in your direction. So I think that's really key here. And also just echoing what Marissa said about, well, we have the consumers, there's a strong consumer demand that's putting a lot of pressure on the global brands. We also have a lot of institutional investors that really want to put their pension money out and work with sustainable companies. But my sense is that it's still difficult to find those investable entities. Everyone's kind of trying to throw their money at the same small set of companies. So we need technology to create the real-time data and insights.
Yeah, well, this is so interesting. That's a great point, Miguel, because that's what we're focused here at Generate Capital on, is just the innovation that we need in sustainability is in business models and in trying to get more businesses to a scalable point. And Marissa, as you mentioned earlier, trillions and trillions are needed to get us where we're going. So I guess my first question for everybody is, where is that investment coming from? Who is funding it, and who is funding it at scale? Marissa, let's start with you.
So it very much depends on kind of the state of the business and the company, because a lot of what I call technological innovation or breakthrough innovation tends to be funded at the starting point, friends and family. It's classic life cycle of businesses. And then you get into the venture capital world. And then once you can demonstrate cash flow and a business model that is proven, then you begin to get the sort of private equity money and the scale capital. And then, ultimately you get the big institutional capital, typically once you've gone public, not exclusively, but typically. But the technological disruptors, if you will, that are breaking through on these systemic issues are no different in terms of the life cycle and how the capital is attracted. But I think what is a little bit different this time is, this purpose-driven desire of the capital to achieve outcomes. So this ask of, can you demonstrate your impact? And is it transparent, and can you report on it? I very much appreciate this issue of the data is not consistent. It is not all that we need today. There are a number of initiatives that are going on across the globe to try to create some kind of consistency and harmony. So if you're an investor, it's very difficult today to compare two companies side by side because the disclosure is inconsistent. There's no regulatory imperative for that. So a lot of what happens in sustainable disclosure is voluntary. And I certainly am encouraged by the fact that leaders, whether they be big companies or small, B Corps and SASB and some of these other organizations that are voluntarily saying, you know what, best in class people are free and happy to disclose. And hopefully there's peer pressure that crowds others in. But we need more of that. And by the way, the regulators are beginning to get on that topic as well. So a lot of what I see in my world is a political will to really drive this agenda of more capital to invest in protecting and saving the planet is manifesting itself in regulatory intervention. So the EU is very much the farthest ahead. They're trying to create a common language, a common taxonomy. They're also putting in place slowly regulation, which will require certain forms of disclosure and transparency. Those can only be good things to allow our industry to scale. But then we also need those technologies that allow people to have the information. So, you ask many companies today, it was a perfect point. I mean, you ask even the most sustainable arguably sustainable businesses. Let's take fashion for an example. Stella McCartney will tell you, after decades worth of work and starting as a mission-driven business owner, always trying to get at the source, she'll tell you even today at the very, very end of her supply chain, you don't always know. Paul Pullman would have told you at Unilever, you want to buy from sustainable sources, but at the very, very end of their supply chain, do you really know whether that palm oil, as an example, is done in a sustainable way, because it might be smallholder farmers. But we're going to get there, because sensor technology, other forms of AI and machine learning are allowing us to get access to that data. So it is, in my opinion, just a matter of time before that quality data does come through, and then the consumer will pick and choose. I mean, last point I'd make is that I see it in my world. I'm informed a lot by our next gen, who are today very powerful consumers with their wallet driving change, but they're beginning to be investors. They're inheriting money, they're growing their wealth, and they are very much saying that they want to see this happen. And what I love about that is that they're converting the consumer wallet into an investing wallet. And as they demand that change, we see the companies responding. So what's happening in the fashion industry? Some of the fastest growing categories are those categories where it's sustainable, maybe recycled material, or whether, this whole notion of consignment businesses. We took one of them public, which is buy fewer goods, but by quality that lasts, gently loved, reused. I never thought in my day that I would see one of those kinds of companies go public and thrive. But this is what I mean about this sort of underlying sort of forces at work driving that behavior change. So that's why we are all very, very optimistic.
That's great, Marissa. Yeah, I love that example of the fashion industry, and definitely how consumers today want more alignment in everything that they are buying and everything they're putting their money into. And I think the challenge is really on companies to figure out how they're going to align their supply chain and have the right systemic incentives to get where we're going. So Morten, I'd love to hear your take that Marissa sort of alluded to, is like what's happening on the ground there. How is the system changing to adapt to this, and how are they investing to make sure we actually have this alignment going forward?
Yeah. I mean, great point on the alignment and speaking the same language. And I think that's one of the big challenges in terms of really capturing all those consumers who want to do the right thing. The problem is, if you want to be a responsible, purchaser of goods, what do?
Yeah,
it's very difficult, because there are so many different certificates. One will make sure that you don't get an itch in the neck because there's no harmful chemicals, but nothing about the producers of that, and nothing about the wages. Another one will make sure that this, the workers who did it were paid a proper wage. But there's so many different certificates. So we need to make it super, super easy. So when you go into a place and you want to buy this blouse and you see another one and they're equally cool, equally priced, then one has an A, one has a B or a C, similar to buying a fridge or something else. Luckily, we have something called the Sustainable Apparel Coalition, who's working on exactly that. They have created the framework upstream, so from manufacturers, how they are rated, brands. Next step, which is coming very soon, is how we actually communicate sustainability to our customers. So I think that will be really key, because we can't only, even though I said that the consumers are down here, we also have to make it easier for them. Then we'll see more of it. In terms of the investments needed, I think it is, we often speak about the need for new technology, and in my industry, it's especially around new fabrics, that it's not only going from cotton to organic cotton or from polyester to recycled polyester, but really accelerating and scaling those truly sustainable materials. And they all say the same thing, we have it, but they haven't gone to scale because we have no investments. And the industry is so fragmented, so we don't have the big brands that will go ahead and say, I'll invest in this, or we have very few of them. So I think our industry also needs to be much better at working together, at bundling these things, so we can attract the investors. Because I can also see, as an investor, why would you go in, on one supply chain and invest that? That's pretty risky. So we need to be better at, working together to attract investors in this field as well.
Can I just jump in on that one point? Because I just did a sustainable fashion panel, and it was all next gens, and I was really inspired because on the same panel we had some young disruptors that were really starting from, I'd say, the grassroots level of building their business and wanting to make it sustainable front to back. Pangaya was one of the ones on my panel. And they literally look at the tags. What is the button made of? What is the ribbon on the packaging? The packaging it comes into is compostable, in addition to advances in material science. But the point that they made, which I thought was a really valid one, is when you're a young early stage company, oftentimes it's cost prohibitive for you to pursue, sort of some of those sustainable fabrics and other source materials. And then another person who was on my panel was a young entrepreneur who repurposed herself from the world of finance and went into creating a platform where she can collate orders from young early stage companies together so that they can purchase in bulk and bring down the cost of something affordable. So I love this sort of innovative approaches coming at things from all angles to try to break down some of the hurdle points, which maybe are standing in the way of people being more sustainable in the fashion space. So that was a nice thing to see.
It's a really good point, because for many smaller players, getting access to the sustainable materials, it's the minimum orders that are the big problem. So to get access to these world-class, manufacturers that has those products. So Treadler from H&M is another example. Similarly, how they, show all their supplies. So these are already vetted. Go ahead and use them. So there are many good. But to your point, what is often cited as the number one stumbling block is that it is still cost prohibitive.
Yes.
I mean, we still do not have a system where companies doing the right thing are rewarded in terms of cost. It is still more expensive on many areas. Of course, there are, if you talk about climate CO2, there are a lot of savings you can make, but sometimes the companies making the investments are not the same ones that will actually reap the benefit. So it's also about sharing costs and rewards along the value chain that can be an issue here.
That's a great point, Morten. I want to go with you to that on Mikkel, because you look at pricing across the system, right? And you were talking about this, Morten, about the whole system and how the industries need to work together to sort of change their infrastructure to work better and more efficiently and get things from point A to point B. I remember talking to a fashion executive earlier this year, and he was saying, every garment travels the world multiple times. So it's a piece of oil that starts in an oil barrel if it's polyester, and then it becomes fabric somewhere else and gets sewn into a garment somewhere else. The fossil footprint of that is very large. And when you look at the whole supply chain, it's the consumer really sort of depends on the companies to do that. So Mikkel, I'd love to talk about sort of pricing in the supply chain and how do we know that we're pricing the right things, and how are we getting to this place where we're rewarding companies for the right things?
Yeah, maybe that's back to what I said earlier about transparency, and also something that Marissa said about the standardization, because if we can't really compare how we measure sustainability in the supply chain, it makes those purchasing decisions very difficult. And we are at a very immature stage right now, where there are a lot of we have these very static reports that we issue, and we know when the auditor is coming, so we paint a pretty picture of our company and how we perform. We need to change that to be, as I said, real time. And we need frameworks like the SASB framework to measure those companies. And I thought it was very encouraging when you see large investors like BlackRock and others coming out and saying, we will be using these framework when we put our money out to work in the industry. And you have Dow Jones also taking a very active stand in trying to create those real-time metrics for their exchanges. So the key thing is having comparable metrics, and then the transparency piece is also the next step. And I think there are ways where we can get money out working at sort of the root of the supply chains that can be very clever. Again, we can use the consumer demand that they want, brands that are sustainable, and big consumer brands like Unilever and others. They know that the consumers are willing to pay a small premium for the sustainable chocolate bar or the sustainable clothing, and that allows us to, if they're willing in 3 years from now to pay that premium, and if Unilever and others are willing to say we will pay a certain premium in 3 years, then we can issue green bonds and we can start helping the smallholder farmers change their manufacturing practices, because it takes a massive investment in changing your manufacturing practices or your farming practices. You don't go from unsustainable to sustainable overnight. It takes years of changed practices. So we need a combination of working with the NGOs. We need the standardized measurements. We need the digital platforms that can connect the smallholder farmer with the consumer on the other end. We may need technologies like blockchain to create the transparency, and we need the different brand owners to be able to share infrastructure, share measurement, share infrastructure, so we don't have proprietary infrastructure to create the transparency. So I think that's maybe I really like what came up before about sort of starting to share resources, to share supply chains, being open about, we have vetted these suppliers, they meet our standards, we've vetted them against, let's say, the SASB framework, feel free to approach them. That's how we really make business and money flow in the right direction. So I think that those are some of the key things.
I also, just maybe one point, Emily, that I'd love to jump in on is that the other thing that the finance community has not done to date, or done as well, if at all, is price in negative externalities. So if you are unsustainable, historically, the world has been considered a free resource, the environment, and we've used it at will, but never actually tried to price in the negative cost of maybe bad or unsustainable behavior. It is very, very early days, but it is a provocative concept in the world of finance for us to be thinking about putting a value on natural capital. And if you were to do that, either in the negative, so penalize you, if you will, if you are not using resources well, or giving you in the positive. And I was just on a panel the other day where somebody was talking about investing in the oceans, and they were investing in a seaweed business, and the seaweed business as a feedstock in its own right was what this business was doing. So it was selling its products as fish feed. However, what was interesting is the returns on that business alone would satisfy any investor's requirements, because there's a great deal of demand for that sort of clean feedstock. On the other hand, they were saying that what is not priced in is that material is a massive carbon sink. It sequesters carbon. So if you actually put a price on that carbon sequestration, which is where we're headed, imagine then the multiplier effect on the returns to the investor and the enthusiasm and the investment community get involved. So I think there's something well, and we talk about, I do think sort of pricing in the value of nature in some respects is a field that is growing in its importance. And I think that could be a little piece of the overall equation here.
Yeah, we've definitely seen the idea of talking about natural capital as an asset class grow over the past few years. And that's a really good point about seaweed in particular. I always say seaweed, bamboo, and mushrooms are the materials of the future. But I wanted to go back to this concept about getting paid, for the whole panel to talk a little bit about that, and who is going to pay for this. Because at Generate, we're an infrastructure company. And so we think we have a 100-year business plan. We think generations into the future when we invest. And so when you invest today, we say, well, what infrastructure deserves to be here in the future? And so we're only investing in sustainable infrastructure. But the other aspect of that is that you don't actually have to pay to save the planet. The way we do it is that we save people money, and you unlock capital that they can invest in other things, or that they can invest in sustainability, because usually it's more efficient. But then you also look at the whole picture today. And sort of as Marissa was indicating, we live in a world where, I have a friend who asked me a few months ago about why do we live at a time where a vegan burger is more expensive than a burger made of cows, right? If you look at the planet and the carbon price around it, we don't have that. So I want to talk a little bit about this concept of getting paid, or forcing people to pay for this. And really what we just want is to unlock capital so that we have some efficiency in the system. So let's go to you, Morten. I would love to hear a little bit about, how are these things getting priced into the system, and who is paying for them, and who is getting the benefits?
Well, the problem, as Marissa said, that nobody is. But we do have some front runners out there, like Puma, who was the first one, and then now Caring doing the ePNL. So they actually take in the externalities first on the environment. Hopefully one day we'll also see it as a social. So we have that P&L that actually factors in, the cost for the planet and also the social side. So I think that needs to be the future, that actually it is part of the price you pay. I don't believe that you as a consumer should pay an extra price for the product to be sustainable. It shouldn't. It should be all products that are. We shouldn't have special collections that are sustainable, and then because then you would ask, what about the rest? Are then not? You can have some that also, of course, go up and and beyond everything, but everything should be sustainable, and I cannot see that happening without regulation. I think I've worked in this field for many years. I believe in the business case, but I also see that it doesn't work for everybody, and not everybody has owners that think into the future and are future-proofing, but are thinking only to the next collection. So I do think we need regulation that rewards companies doing the right thing, and some of that could be, how do we actually make sure that the externalities are part of the calculation and part of or just as an investor, you're saying it, Marissa, it will, and it is for many companies, part of the due diligence. Is this company, is our investment future-proofed? If the company is doing nothing in terms of looking at their resources they're using, when we know that climate crisis is not something that will happen, it's something that is happening now, and the price of cotton or polyester, etc., will change. So if you don't have a strategy as a company for where you will be in 2 years' time, how you will absorb that cost of bigger, more expensive raw materials, then it's not a very good investment. So I think investors coming in, that's my biggest hope. Unfortunately, legislators tend to be very slow, hoping that they can move faster. Some really good signs from the EU. We just saw the UK the other day talking about mandatory reporting. Denmark was actually a front runner in mandatory reporting. That moved a lot here in Denmark, when all of a sudden companies were told that in the annual reporting they had to talk about what they were doing on sustainability. So some of these levers will be helping us in that business case. And then one part of the business case that we haven't spoken about, but which was has always been the biggest business case for sustainability, which is, do you really want to work in a company that doesn't have a strong purpose? Do you want to sit there around the Christmas table and they ask you, your family asks you, so where you work, and you're saying there, and they say, oh, you flunked all your exams, so why are you working there? Because that's a pretty bad company. Historically, for many companies, that has been the biggest business case, because if you want to attract the biggest talents, having a big salary is not enough anymore. So I think that continues to and will keep on playing an even bigger role with the Gen Z, et cetera, as you spoke about, Marissa. I think that is something, not only, with their wallets, but also in terms of attracting their talents, that will be a big lever to pull.
Yeah, this seems like part of that journey toward making sure that we are pricing the right things and aligning incentives like we've been talking about throughout the whole conversation. Mikkel, I'm curious where you stand on that, and where are we pricing the right things, or where do we have to really make a difference in how we're thinking about the cost of things?
Yeah, while listening in, I couldn't help sort of think about how we have been sort of optimizing our supply chains for decades, and we've been super good at just focusing on price and productivity, and we've created these very long, very fragile supply chains, and it's been exposed with COVID how fragile they actually are, and how unsustainable it is that we can buy a meat burger much cheaper than a vegan burger, even though that so much work went into creating that piece of meat. But so I don't know. I'm still undecided if COVID is actually helping us or if it's a barrier. But I think it kind of made us wake up and realize something about fragility of supply chains and what we actually pay for the products we consume. So maybe I think it's helping create more awareness on that front. But what I also thought was interesting around COVID was all the creativity and innovation and people just jumping together trying to solve this problem. And we've thrown so much money into solving the COVID problem, and right, left, and center, we're seeing research teams coming out with new vaccines. And imagine if we'd thrown all of that energy into saving the planet and solving those bigger problems. And we've had all of the young people screaming for a couple of years and helping us wake up and realize the magnitude of the problem we're facing. And so I'm hoping we can use this collective energy to point the finger at the systemic failures we have in modern supply chains and how we do trade. It's about all of the power imbalances between those that are big and are at the top of the supply chain. They have a special responsibility to sort of drive that change. It's very difficult when you're at the bottom of the supply chain to really do it if you don't have the incentives coming from someone bigger than yourself. So I know I didn't really answer the, who should pay for it and how much, but
that's okay. I want to go back to Marissa. I think you raised a lot of good points, Mikkel. I want to go back to Marissa in a minute. But yeah, or Morten, if you want to respond, did you want to respond to
COVID-19? Because I agree a lot on what you said. On the one hand, it's amazing what we can do when it's a short-term thing, right? People are dying. We need to do something right now. Climate, even though people are dying around the world because of the climate crisis, it's far away from us.
Yeah.
So that's short-term, and that's with business leaders, that is with politicians. You are elected for a relatively short period of time, or you're a CEO for a relatively short term, and you optimize within that. And unfortunately, the result is that climate is not top of mind, even though it should be, because very soon we will be faced with resource constraints. So on the one hand, yes, great to see what we can do. A little bit sad that when it's not immediate, and the fact that we know the longer we wait with climate, biodiversity, the more expensive it will be for businesses and society. So I think that's the dilemma here. Optimism, we can do it. However, the system doesn't reward the politicians nor companies doing that.
Although I think let's go back to Marissa for just 1 second, because I just intro it and bring it all together for a little bit, because when we look at this space, as we've been talking through this whole conversation, sustainability is really a systemic problem, right? But investors don't necessarily get paid for solving systemic problems in the same way they might expect to launch a new app or get paid for software, right? And so I wanted to ask Marissa specifically about like changes in investor expectations and whether they just think about getting paid at a different frequency. Or, we've seen the stock market rewarding already some of these clean energy companies that have done really well, especially during COVID. But is that enough for them? Like, what are investors thinking about what returns would look like in this world where we are going to be resource constrained?
Well, first of all, I would slightly disagree, I guess, with Martin in that that environment is sort of lower down in the priority chain. Because if you look at all of the initiatives that are happening now around the world around Build Back Better and the Green New Deal and things like this, the nudges that are coming from policymakers and regulators are heading in this direction to promote everything from electric vehicles to investing in green infrastructure and so on. So I would actually say they're beginning to do their part. And when we left who's paying for what, I think one of the big things we didn't touch on is subsidies. In my opinion, we're subsidizing the wrong industries, because what's happening is a lot of subsidies are in legacy businesses, which are climate unfriendly. If we just reallocate the subsidies in fossil fuels or farming cattle to greener solutions, imagine the opportunity set that would create for the investment community. And also having that be catalytic or kickstart capital to scale. Because one of the things, if I take out of the instruction book of wind and solar, a couple decades ago, when wind and solar first started, the cost was dramatically higher than fossil fuels. And the only way that we could make those companies viable at the time is if you had governments buying the offtake, buying the energy from those companies. But what ended up happening is they got to a tipping or scale point. And then as soon as that happened, no one ever foresaw how quickly the prices would drop. I mean, wind and solar is 85% less on a per unit of energy basis than it was a decade ago. 85%, and it's cheaper now per unit than fossil fuels. So back to this point about when is it going to be favorable to the consumer? I think if we could have a regulatory or policy nudge or incentive or whatever you want to call it, that then gets the industry to scale, and then it almost takes care of itself. Then the governments can step out, because it will be at a point, that tipping point, so that it probably ends up being cheaper to do that. And then the system begins to work. So I don't think anybody can operate in silos. And these days, I think if we can all figure out with whatever pools of financial incentive that from industry to government, civil society, et cetera, that's what's going to be needed. And I think that's the recognition of the investment community for systemic problems. It can't be only governments. It can't be only philanthropists. We know that. You take all the government and philanthropy money that exists, there's still a gap in solving environmental and social problems. So that's why private capital has to be there, but it's part of, I would say, a big pie chart of everybody pulling their weight. And by the way, the one other thing I'd point to, and this may not be popular to those of you who are in a consumer industry, I do believe that a part of the obligation is individual and it's reduction of consumption. I mean, when we look at the highest carbon emitting industries, if we're going to get to net zero innovation, it's process improvement,
Yeah.
More. Fashion industry, in particular, we all have more clothes than we've ever had in 50 years. And of course, you wear one body, so you can only wear them once. And, this sort of thing, I think is something that is worth mentioning.
Yeah, I think those are really great points, Marissa. Morten, did you have a follow-up on what Marissa was saying?
No, I totally agree that it's really, really positive science, and the EU is becoming more and more aggressive. There's now new reduction targets, et cetera, et cetera. So but we also see in the latest report we did with McKinsey, Fashion and Climate, that we're missing the Paris Agreement by 50% if we continue with business as usual. So it's good, everything that is happening, it's just not enough. So we're still looking at all these cool things happening on energy, which is amazing. Come from Denmark, we love wind energy, but we're also seeing that for our industry, where it's upstream, it's in the manufacturing countries, where even if we ask them, there is no sustainable energy in the grid. So it's a big transformations in countries that are still, building coal, fossil fuel energy. So I agree. However, we really need to accelerate that is happening more than what we're seeing today.
So I had one question for
Good
Mikkel.
news is China said net zero.
Yes, for sure, Marissa. Yeah, before we go to the audience for questions, I had one question for Mikkel to sort of bring this all together, talking about that Build Back Better idea that Marissa just mentioned. One of the big conversations in that, and obviously in the COVID in the past few months, has been how to make sure we're doing this in a egalitarian way that shares benefits around if we're producing benefits, or that shares costs equally, and like rethinks our subsidies and that sort of thing. I know at Generate we're part of this group called Renewables Forward that's trying to hire people from all different parts of the different industries into renewables to make sure we have a more diverse renewables workforce system than maybe the energy system had in the past. But Mikkel, is there anything? How do you think about that, and how do you find a egalitarian way to approach this pricing investment issue?
Oh, that's a tough one for me. I have to admit, coming from a technology perspective. So I'm not sure I have a really good answer how to get some more diversity into it. But I think, again, also going back to what I said earlier, if we need the transparency also to measure elements like diversity. That's part of the measurements that goes into the mix here, and so I think we need those shared solutions again, so we can actually get a indicator of whether we're doing the right thing with regards to diversity, both on all those diversity dimensions. So yeah, not a really great answer for you here.
Well, data is definitely a start, right? We don't have the best data yet. Marissa, did you have anything to add to that about just thinking about sharing these costs and benefits equally throughout society?
I think one of the big topics that has come out of the COVID crisis actually is the great inequities that have been surfaced, whether it's healthcare, whether it's jobs, whether it's people who resilience by being in cities that are more polluted versus more economically prosperous cities and so on. And so I think there's a call from the investment community to a really, really deep desire to help reduce those inequities, not just because it's a lovely thing to do and it feels like the right thing to do, because it actually makes for good business sense and it's sustainable. And why do I say that? I think when you're solving big systemic issues, that by definition, it's an imperative. And if there are those who focus on those topics, you can actually have longevity in your investments. So that's the one thing. The second thing is, I think there's also very much a recognition that diverse workforces produce better outcomes. I mean, there's enough research there that shows that. And I do believe that the really astute ESG investors are asking those questions. As part of the G screen, they're saying, let me look at diversity, let me look at equal pay, let me look at who's in your workforce and how you treat them, workers, health and data protection, and all these things that, are coming more and more, I would say, up the priority chain from the investor's point of view. And investors are saying that's important, and maybe consumed by other things, but they learn something in that investor dollar to make that behavioral move.
Great. Okay, well, it's time to go to audience questions. And we're going to start with Morten, because I got a few that I think are for you specifically. And if anybody in the audience wants to send in their questions, now is the time. Morten, the first question I have for you is this, it's from Naomi, who's been watching, is the sustainable consumer behavior a trend that is truly global? So is it just sustainable investors in people who care about consumers and in the West, or is it like in emerging markets or China also? Tell us, is that global, and how are you seeing that?
It is global. I think we have done, and many brands and other organizations have done a lot looking into consumer insights, and we see it is a global phenomenon, but it's very different. So the definition of sustainability, if you're in Europe or if you're in Asia and Africa, means different things. So I think that is one of the important lessons to learn, that in many countries, like in Asia, it's always how they value the cloth. It's a tradition in many countries. In Africa, that continent, many countries there. We had a wonderful discussion at CFS Plus a month ago with the director of Lagos Fashion Week about that's in their DNA, how the culture of the country, how they produce the clothes, looking into longevity, not producing something every not 52 collections, but something that lasts and lasts. So I think it's a global trend, but how it's seen and how we need to, as brands, etc., how we speak to that, we need to be aware that we are globalized, but we have different needs and different ways of wanting to express sustainability.
Great. That's a really good point. Marissa, I want to ask you a slightly different question, because we have a bunch of them coming in from the audience, but this one is about paying companies and how we have the incentives on that. So we had a question from Tom who said, it's better to pay companies for positives. They want to be paid for positive outcomes, not for not doing things. So that takes longer than paying them for something that's a positive incentive. So who's going to pay for the positives?
The investors already, I think. That's what I say. They're trying to drive behavior with the investment dollars. So almost by definition, when they're saying, I would like you to do things, it's because they see an opportunity in doing that. I completely agree that the concept of negative, like a negative incentive, is a short-term thing. Things like the divest movement, that says I will shed this investment. That is helpful when you have bright lines and you don't have a plan B or a pathway to something better. But when there is a better answer and you want to see the company move, if you say, I will invest in you if you do these things, and one of the fastest growing areas of sustainable investing is called engagement, shareholder engagement. And this is where shareholders are going in typically as collectives, but sometimes individually, and going to a company and saying, if you do the following 4 or 5 things that make you more sustainable, environmentally or otherwise, we think that's going to make you a better company, and that's going to drive value. And there's demonstrable performance in companies who, in these engagement strategies of the companies outperforming over time, while also becoming better stewards, say, of the environment or better governance or what have you. So I think the good news is that, first of all, it's a growing space within sustainable investment. But secondly, there's enough data now to show that those engagement strategies actually work in incenting behavior change and then creating the resultant value.
Great. Mikkel, I wanted to ask if you could sort of address the same question, talking about incentives and also the opportunities in China for that in areas that Tradeshift is focused on.
Yeah, so I think what we've seen in recent times also with COVID is, as I said, we've seen these very fragile supply chains, and we've seen massive impact on those supply chains, not only from COVID, but also from the whole trade war. So a lot of the trends that have been sort of happening over time just got accelerated. And so some of the acceleration towards more sustainable practices is actually gaining momentum now. Because of the trade war, there's been put a lot of pressure on China to purchase more goods from overseas. And that's opening up for China to create a lot of cross-border marketplaces. They're inviting foreign companies with sustainable products to show off their products and services in China. Just, I think it was last week or here early November, the biggest expo in China, CIIE, was inviting tens of thousands of foreign companies to China to show off their products. And they're now starting to ask for demonstrable data on sustainability metrics to drive that transition. So I think that's actually something that's very positive that's coming out of this whole change. So in a sense, you could say trade war, COVID, at least for China, is helping to accelerate those trends. And that's also something we're really seeing with our customers out there, that they're going through this transformation at a much faster pace than we've seen in the past.
Yeah, that's a great point about COVID being an accelerant for things. And this whole conversation, we've had a couple of proof points too, that you can actually change things and you can accelerate things. So things we thought were not possible a few months ago, maybe we think are more possible now. But Morten, I want to go to you for one of the questions we've gotten from the audience. We've got a couple of questions on fast fashion and what is happening to that industry in particular, which has such a huge carbon footprint and such a huge impact on people around the world. What do you see as the changes in fast fashion?
I think we talked a little bit, or Marissa talked about and said whether or not we probably didn't want to hear it, but I mean, about the whole decoupling of value and volume, I think that's something we need to look at. The whole, not only fast fashion, the whole industry, how can we remain a prosperous industry within planetary boundaries? We cannot do that without having that discussion about volume versus value. I think that is for all players. For fashion players also, you see even lots of the fast fashion, if that's what we call it, they're trying right now with leasing models. They have repair shops inside. They know that talking about longevity, the quality of the garment, will be one of the biggest discussions in the future. I think one of the really positive things here is the whole circular movement. And I think the fact that right now we have an industry where 40% of everything goes on sale. Who wants that? That's not good business. If you instead could be part of a circular business model where you don't have to use those, especially in the future, very expensive virgin materials, if you close that loop, you don't only sell the product once, you sell it 4 times. You can make more money. And also then all the signals it sends to the system, all the incentives it provides for actually making something of a good quality, where you start valuing, the items, your clothes. The culture shift is something that I think is really, really promising for our industry.
Thank you, Morten. Well, thank you to all our panelists. I thought this was an amazing discussion and raised a lot of points that we will keep thinking about for days. We're at time, so I want to make sure we go back to our hosts at Tradeshift. Thanks for hosting this debate.
Fantastic. Thanks to Emily, Marissa, Morten, and Mikkel for joining us today. It was a really interesting discussion. I mean, I think it was great on my behalf just to hear, the many different innovative approaches with sharing costs, rewarding sustainable initiatives, but also need for transparency and building back better. And I mean, I know listening to all of you, it's clear we've still got a lot of work to do, particularly with some change practices. So finally, to wrap, I'd like to welcome our Chief Product Officer, Rafi Brez. He's going to help us tie everything together. The floor is yours, Rafi. Thanks, everyone.
Thank you very much, Christy. What I just heard is amazing. So thank you to all the panelists for sharing such good information and insight. It's time to wrap. I'm taking you home with a couple of visuals, and hopefully that will recap all the good content that we had today into the debate. I just need 5 minutes for that, so let's get started. So at Tradeshift, we want to empower every company in the network to become a more environmental, sustainable business. What we will see in the next couple of slides is how fact-based environmental, social, and governance data can drive the digitization and enable green finance investments and create a more environmental, sustainable business. So the pressures are, as it was mentioned, started start also with the investors. And I was glad to listen to Marisa. And I think actually Credit Suisse joined the PRI, the Principles for Responsible Investments, in 2014. But this organization that is sponsored by the United Nations has now $90 trillion assets under management. So it's a wonderful, a very powerful power of investment and also influence. And what we'll see also that the pressure is coming from the consumers themselves. 55% of the consumers are ready to pay a little more or more to have sustainable goods and services. And talents. So it's also a generational dimension here. So of course, the younger generation are way more sensitive and attentive to environmental. And when I compare to myself, that was not part of my education system, back in the years when I was in France. And now I can really make the difference. I mean, I can really feel the difference with the new generation. But as the speakers were talking about, it's not only the younger generations, investors or more actually the more mature players there are also very concerned and want also to participate by asking for more disclosure about environmental sustainability and governance. So on the next visual, the reality of the situation is the data to collect and to measure the carbon footprint or the gas emission is actually still in siloed. The supply chain is still 80% are still on premise, so they have a bunch of data sitting there that is not connected to the rest of their business. I would say the full supply chain. So the lack of digitization across supply chains created the need to link this information and to expose it to buyers and also to ask suppliers to disclose more. So when we move to what Tradeshift is doing about a year ago, if we move to the next visual, please, Lindsay. About a year ago, we started working with third-party partners into this domain, and we worked with Normative which is a third party collecting data and presenting dashboards and how to measure carbon footprint and emissions, how to measure also the savings that are coming from calculating it from invoices and purchase orders. Today, we are doing pilot with a selected group of customers to help them achieve the reduction of CO2 footprint and gas emission target. The app is available on the Tradeshift platform. It is actually in production with our pilot customers. It's not visible to all, but if you would like to participate or if you like to join the program, you can just contact us and we'll be very happy to present to you what has been achieved with the Normative third-party partner. How do we do it? So we, as you know, we are onboarding suppliers, we are onboarding buyers, and we collect data. And the idea there is to collect data from suppliers about, how environmentally sustainable friendly they are. And this can also go down to social dimension when we talk about the governance around environmental sustainability. And then those suppliers will collect information from their suppliers. So then we move from tier 1 to tier 2 and tier 3, as Nicole was mentioning. So this is how we want to help. Here is to provide a way for our buyers first to collect this information, having the suppliers providing it, and then we'll ask themselves to ask the suppliers of their suppliers on how they are doing on environmental sustainability. So just to recap with the mission we are doing with Normative, and this is the next visual, Lindsay. We want to connect the ecosystem, as Nicole was saying. We are enrolling large buyers, manufacturers onto one platform, and they are bringing all their suppliers, large population of suppliers onto the platform. So we want to really help the ecosystem that we have on the platform to collect this information and to expose it, to be able to provide measures that they can expose to their investors, to their shareholders, and to their employees and consumers. So just to conclude on the next visual, how this is how at Tradeshift we are approaching a sustainable cycle. First, we want to capture ESG data from suppliers. We have specific ESG questionnaires and third-party questionnaire provided by our partners. Then we want to help the buyers to add those criteria into their purchasing decision. That will be with the buy product. We want to measure with our partners the carbon footprint emission from supplier invoices and purchase orders. And that will be a combination of buy and pay. And then when we are talking about, who is paying for it, or how can we encourage suppliers to be more environmentally sustainable friendly, we can actually think about rewarding suppliers with better early payment terms, for example. And in our cash program, we are using the same set of investors and private equity funds, and so it can be institutions, corporates, investors that are participating into this program. And we can think about providing, better terms for those suppliers that are more sustainable friendly. And then we can enroll more tier 1, tier 2, tier 3 suppliers, and encouraging them to be more sustainable, environmentally more sustainable. So that was the word of conclusion. I would like to thank all the panelists today and attendees for this second debate. I look forward to our third debate next week. And thank you and have a great day. And back to you, Christy.
Fantastic. Thanks so much, Rafi. So now that makes week 2 a wrap. Next week for our third debate on people, we're going to be discussing, does work still actually work? So I look forward to seeing you all then. Same bat time, same bat place. Have a wonderful day. Enjoy the rest of your week and please stay safe. Bye for now, everybody.